Hi traders. I wanted to share 4 of my main trading setups with you. As you know, I primarily trade the ES and NQ, E-mini futures. My charts are set up in NinjaTrader version 8, and I use a few basic indicators. These are also available on my GitHub site linked to my channel intro video, and also linked in this video's description. Before I describe the setups, I want to take a moment to talk about my trading mindset and methods. I am a patient, but also aggressive trader. I generally wait for market internals to align with futures price action. I also generally prefer the ES and NQ to be correlated in price action before entering a trade in either instrument. I also check for any market-generated information from the weekly and overnight price action. I use market profile and auction profile theory to build daily bias, and I track key levels such as untouched volume points of control, value rejection areas, and also keep track of high volume edges, low volume nodes. I am able to gauge bearish or bullish sentiment from the tape fairly well. I combine market internals with order flow and tape to arrive at my entry and exit bias. Onto my setups now. I use 2 main ideas for trading both the NQ and ES, retracements and breakouts. First, let me describe the retracement setups, which I apply equally to both instruments. Number 1. Initial balance high, also known as the first hour high. My setup is activated when this level is tested and fails as indicated by either the market internals or order flow. I am looking to trade this failure back to a key level. My key levels include major fib, pivots, developing and prominent value area low or value area high, session, or weekly, volume weighted average price. I will also sometimes hold a trade all the way to the first hour low, if the selling is intense. Number 2. Initial balance low. Similar to the short setup just described, I am looking for the instrument to find support at the first hour low area, and bounce back to a key level first. This could be a trade to volume weighted average price, a pivot level, or developing value area high. I have found that the order flow and tape can be hit or miss when looking for confirmation for this type of trade. Number 3. Volume weighted average price support, or resistance. This is one of my favorite and most reliable setups. I wait for this setup to develop later in the regular day session and do not trade it on market open. I am looking for the volume weighted average price to align with another key level in supporting my trading bias. The key level does not have to be near it, necessarily, but the key level must have provided support or resistance to trigger either a short on the volume weighted average price or a long on it. The trade must be supported by market internals, tape, and even a rising tick average. Number 4. Overnight high, overnight low. This is another go-to retracement setup for my style of trading. I check for alignment with market internals, and look at the big order delta on my chart. If I do not see intense buying at the overnight high or intense selling at the overnight low, I get ready to enter as long as the market internals are correlated with my bias. I am simply looking to trade back to a volume weighted average price, or another such key level. These trades do have the potential to run in an extended fashion all the way to the other side of the range. Number 5. Developing value edges, namely developing value area high and developing value area low. Number 6. prior value edges, namely yesterday value area high and yesterday value area low. Both these retracement setups are linked to the market finding resistance or support at a previously accepted price edge. Important side note here is that I will usually wait for longer in the regular day session before trusting a developing level. I also watch the relative volume level before initiating trades on developing value edges. Now, I'll talk about my breakout setups. These I am careful in applying to ES as one can get failed breakouts often in ES, while the same breakout in NQ is still a 10-point trade, and therefore gives the trader an opportunity to break even. Number 7. Key level breakout with confirmation from internals. I will trade any first-time forceful break of a key level toward another key level. However, these are tricky because the first break is usually a false one, and price retests a high value edge one more time before retracing in the direction of the breakout. I also pay attention to the development of a low volume node before the breakout gathers momentum. I deliberately keep this rule simple and do not couple it with a key level of my choosing, because it does not matter which level breaks, but instead what is more important is the context using which the market got to that level in the first place, and also what the internals and tape are saying. These breakouts can occur anywhere on the chart, near any key level, or start from seemingly nowhere. It does not really matter whether you, as a trader, catch the breakout, but it does matter that you observe the why behind the breakout. Usually, it is a case of look below and go or look above and go. Meaning, that the market has accepted a transition of value from the current area of balance and is willing to move toward another area of value. These breakouts are great opportunities to ride the trend to completion. So far, I have not talked a lot about targets besides mentioning in passing that I will usually target another key level for exit. While this is true, I also read the tape carefully when I am in a trade to ensure I am not caught on the wrong side of a stall in tempo. So that's it for this video, and feel free to leave any questions in the comments section. Thanks for watching.